We have Mukesh Kumar Shah, Chief Financial Officer at Gopal Snacks, here to talk to us about Q2 numbers. So let me start off with that margin number. You've guided for 11 to 13% kind of margin number. You've come at a slightly lower end of that guidance. Talk us through what's happening. Is this a one-off? Do we expect margins to revert back towards 13%? Is that something we can expect in H2?
So before margin, I'll just talk about revenue.
Yeah.
So revenue is something which we are growing in double digit. If you see year-on-year growth has been substantial, 13% growth. When it comes to margin, I have given the guidance of 11 to 13%, and we are in that range. You have to see the price of raw material, which has gone up substantially when we compare Q1, Q2 of last year versus this year. Chana price has grown up by close to 15%. There is an increase in palm oil price as well. However, the increase in raw material prices, to some extent, we have taken a corrective action and reduce the grammage to certain extent to negate the margin, to negate the impact. In H2, while 68 to 70% of raw material cost is not in our control, while there is a significant change in the price, we take the impact, we negate the impact to some course correction in terms of prices, grammage, etc. But still, I will maintain my guidance of EBITDA margin at a range of 11 to 13% at a finance overall FY25 level or financial year FY20.
Okay. So these raw material costs, largely palm oil, is that what's really impacting your number?
So there are three major raw materials which constitute 70% of our raw material cost. One is chana, which is close to 25% of our raw material cost. Then oil, again significantly 24%, and there are packing material, laminates, etc. While there has been some reduction in price of laminate in Q2 compared to previous year, but chana and palm oil has stood up very significantly. In September also there is a hike in the import duty, which has increased. The import duty got increased from 5% to 25%. While we have taken corrective action in month of September by grammage reductions, etc. But still, the raw material is something which is not in our control. So the margin will be in the similar range.
Mukesh, what's the outlook on growth? I mean, one, for the second half, because we are in the festive season as well. So does it bump up slightly more from what you've done in Q2? And I was reading a note which said that your FY24 to 27 growth CAGR is about 15%. Is that a reasonable estimate, or is that being conservative?
So H2 is going to be better than H1 and Q2 for sure, because being festive season Q3, and already we have built up in terms of our footprint expansion in focus market. We have done a lot of efforts in our core market, which in Q1 had shown a growth of 3%, and subsequently in Q2 we had witnessed 6% Y-on-Y growth in core market, and we will definitely have higher growth in Q3 and Q4 coming from core market. And focus market is something where there is a growth close to 29-30% year on year, and which will continue to be there. So H2, one being festive season, and because of the infrastructure and manpower teams we have built, definitely H2 is going to be much better in terms of growth compared to H1.
Okay. And I believe some of your hero products are a very I mean, they are maybe consumed across the other countries, other states as well, but they are favorites of a particular state or two. So do you envisage a multiple hero product kind of a strategy as you expand into other states for growth? Or do you believe that the same products which are working for you beautifully in the one or two states which you are mainly present can be expanded as the main product into other states?
So while we keep on innovating new products, we have introduced a couple of regional products in last couple of quarters. But having said that, Gatia, something where we are market leader, where you meant Gujarat having higher consumption of Gatia. But we have witnessed a higher demand in UP and Jharkhand. When we approached UP and Jharkhand as a market, 75 to 80% of our billing for Gatia is only from UP and Jharkhand. So people are accepting our hero product outside Gujarat as well. And we are seeing, if you see our Q2 performance, there is close to 16% volume growth only in Gatia in Q2, and wafer is something which is growing by close to wafer is something which is growing close to 45 to 50%.
Right. So of course, raw material prices going up, volumes you're doing 16%, revenue you've done 13. Just talk to us about value. You expect pricing to see a significant increase, and if at all, how much? If you can give us.
So when you say pricing, you mean so we are into 5 rupees, 10 rupees SKU. So it is a currency for us. We
Right.
cannot increase the price for 5 rupees going to 6 rupees or 10 going to 12. So whenever there is a change in the price, it is only through grammage. Having said that, there is close to 10 to 12% of revenue is coming from higher pack, where there is a possibility of MRP increase in MRP whenever it is only because of raw material prices, etc. However, on the back of host of backward integration facility, our cost of production is always lower compared to any other player in the industry.
And sir, with regard to new product launches, anything in the pipeline?
So currently we have couple of products, but it is a process. It takes time. It goes through research, development, lot of testing, etc. So I'll not commit on any new product coming in near future, but definitely there are few products both in our Christos brand as well as outside for Gopal brand we have in pipeline.
Okay, now you've commissioned a new raw material processing unit as well. You're expanding pan India. For FY25, you've given a guidance of 11 to 13% on the EBITDA front. I was looking at estimates which firmly put your numbers over 13% but under 15% a couple of years out. I see competition at maybe 15 to 17%. Would you believe that you will stay in the 11 to 13% band, or in the next 2-3 years there's a possibility that you may enhance margins even as you're expanding?
So we will enhance margin definitely when you get into FY26 and FY27 arena, because the reason being 5 rupees SKU, which is currently contributing 70% of our revenue, slowly will come down to close to 60% and 55%, and the higher pack will take a place there. So in the higher pack, you have the opportunity to do price increase, etc. Similarly, we are increasing our base in alternate trade channel. For example, all sort of e-commerce, quick commerce, catch commerce, modern trade, railways, etc., where larger denominator packs are being sold, which has a higher margin to us. Thirdly, our wafer market, which is currently at an annual run rate of 200 crores, is growing at a very fast pace, close to 40% in terms of volume. And we expect this volume growing at the similar pace in the years to come, and which has a higher gross profit margin compared to any other product in our basket. So overall, having said that, and even our capacity utilization is close to 40% currently, with the increase in the sales, etc., we will leverage on operating expenses, which is more or less fixed in nature. So this all benefit is going to give us a higher margin in after I'll say FY26 and FY27.
You expect it to go out to about mid-teens, 15% odd in FY27-ish?
14.5%.
14.5% by FY27, something like that.
Yes.
Okay, good.
So, and you suggested you were also into backward integration. You're one of the few players doing that. How does that give you a leg up? If you can just give us.
We have our basin plant, which is close to 125 metric ton capacity a day. Then we have our own India's largest snack pellet manufacturing unit. We have India's largest cold storage unit, which is again located in the heart of the potato crop area at Modasa. We have our 270 plus own fleet. So this all put together in terms of margin, etc., we get 2% edge at a current revenue. 2% of the benefit we derive from backward integration, and which is scalable also. So with the growth in revenue, etc., we can scale on backward integration as such. So it is not only the profit margin, but also it helps us in maintaining a stable quality parameter, because all our sourcing of raw materials happens directly from farmers and APMC. And so we give a bulk order. We do a stocking of the crops, commodity, etc. Whenever there is a crop season, so which help us in maintaining the prices. So our prices is always lower compared to the existing market price. So that's the depth of backward integration we have.
Fair point. Thank you so much, sir. Good speaking with you. Great getting perspective.
Thank you. Thanks.